Welcome to the Q4 FY18 result conference call of Sintex Industries Limited. I would like to thank the management for giving us the opportunity to host this call. The management team is represented by Mr. Amit Patel, Group MD, Mr. L.M. Rathore, Group CFO, Mr. Prashant Shah, CFO, Accounts and Audit, and other senior management personnel. We'll start with the commentary from the management and then move into the Q&A. Thank you everyone, and over to you, Amit sir.
Good evening. I would like to welcome all the investors on our year-end conference call. Last year, we have seen that Sintex yarn ramping up the capacity of 600,000 spindles. We have also seen textile unit venturing into printing of fabrics. So we have almost installed both the units in full capacity, our yarn facility as well as our printing facility at the Kalol. Yarn facility, first 300,000 spindles has done full utilization and efficiency for the whole year. The second 300,000 spindle, which has done partly, on Q4, we have seen both 600,000, Unit 1 and Unit 2, Phase 1 and Phase 2, both have done ramp up of the capacity. Still, we feel Phase 2 still needs some ramping up, which will happen in Q1 and Q2 of 2018-19. Printing of the fabric has been well accepted in the market. Our products are coming out well. We have started printed on a basic fabric, and soon we'll go on a more value-added corduroy fabric to be printed at our location. As far as Phase 2 completion is concerned, we will also do linen this year. We also do melange, linen cotton, linen silk, wool silk, as well as grindled melange yarn, value-added slub insertion and color injection yarns. These part of spindle, which is another 152,000 spindle, will slowly come up within this year as far as on the floor is concerned. But the major revenue from these particular line of the business will come in 1920, because it's a very high-end, very exotic, very ultra value-added and very expensive yarns. You need creativity, and creating market, mostly in Europe, takes a lot of time. We are all very excited. Most of these yarns are going to be first time in India. On full-fledged basis, will be the second largest producer of linen yarn in India, and will be the largest seller of linen yarn in India in 1920. So, Sintex will have the whole bouquet of yarn by 1920, everything under the roof as far as natural fibers are concerned. We deliberately are keeping ourselves away from man-made fibers. There is a huge competition coming from Eastern Europe. So it's much better for us to concentrate on natural fibers. This has been updated. The Q4 has been very strong. It could have been even better. Other than the government have reduced the import duty on yarn. That's why it reduced our realization locally. But we are discussion with the central government, and we are asking them to increase or put back the import duty before what it was before GST. They are considering it positively, and if that happens, we would improve it to 10 rupees a kilo yarn realization. Also, the dollar was very low for the whole year. It has been below 64.50. Though after April end, we have seen a weakening of Indian rupee, which is very encouraging for our exports. We export about 65 to 70% of our products, and our total kilos quantity produced, and we also sell to 20 to 30 different countries on an average. Till date, we have been sold to more than 52 countries in the world. By doing this, we have also achieved the tag of largest producer of compact yarn in India when we commissioned 600,000 spindles. I would now take questions. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin with the question-answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Keval Shah, individual investor. Please go ahead.
Hello. Thank you for the opportunity. Sir, I wanted to know that how much of our, is there any other capex left basically apart from the value-added yarn capex which you mentioned, which we would be planning for next couple of years?
No, that is the end of it, but that is not an additional capex. It was already planned before. So there is, actually we had planned for 100,000 spindle, 1 million spindle. And we couldn't do that. So actually our capex will be a little lower than actually planned, envisaged.
Yes, okay. So apart from this, there is no other capex as of now planned, right? Apart from value-added spindles?
Not till 2020.
All right, sir. And can you, sir, please give some guidance on debt level? So what would be our peak debt which you had mentioned to be around 4,400 crores? So do we still stay with the same guidance? And from when will we start reducing our debt?
We will be picked out debt at 5,600 crores.
Okay.
And we will start, we have already started repaying the initial debt. So repayments have started. I think you will see 2018-19 March as a peak debt and then start reducing the debt.
All right, sir. And could you comment for what would be our free cash flow for FY18 on console level and for next year, any guidance for free cash flow?
I think 18-19 we won't have a free cash flow. 19-20 we will have a free cash flow.
All right, sir. Thank you very much. I'll get back in the queue.
Thank you.
Thank you. We take the next question from the line of Sachi Sixeria from Value Investment Principal. Please go ahead.
Hi, thank you for taking my question. I just want to understand the reason for this lower revenue in this quarter. Is that largely because of the lower domestic prices you mentioned?
A couple of things. Lower domestic price, yes, number one. Number two, second phase, the second 300,000 spindle utilization was about 80%, efficiency was 95%. On ideal situation, it should be 98, 97. It's more question about training the workers. I think by Q2 of this year, we'll have everything geared up, and then it should be somewhere between 700, 725 crores per quarter for 600,000.
Right, 725 crores. Did I get that correctly?
725 a quarter.
Okay. Also, I want to understand what is your outlook on the domestic market as well as the export market for this year coming ahead? How do you see pricing in the export market evolving?
So right now the market is very strong domestically as well as in exports. We used to get higher realization domestically because the import duties before GST was 25%. By some error, the government reduced the duty from 25 to 5% in post-GST. And that, fortunately, India is competitive, so did not started wide imports from China or Eastern Asia, but it also reduced local prices which we were selling. Internationally, as it is, we were selling at the same price. What we were concerned on international market was the dollar rupee rate. So currently the situation reversed. We are at 67 rupees. Exports are more profitable. and domestic is less profitable because the import duties are lower, and that's why the lower realization of the price. Currently, we are at about 60% exports. Within next 2 months, we'll go up to 75% exports in international markets, just on basis of better price realization. If the duty increases, we'll drop down to 60%. The market is strong. We are waiting. Cotton prices have gone up as a raw material. Our unit prices also are looking forward, which are slowly inching up. So we expect strong international demand in current year.
Got it. Thank you so much for that.
Thank you. We take the next question from the line of Sayan Iqbal, individual investor. Please go ahead.
Yeah, thank you for the opportunity, sir. I've got a couple of questions. The first one is on cash. So I see there's a big drop in cash from 633 crores to 96 crores. Can you tell me the utilization of that cash to the
Mostly capex.
Okay. And sir, what is the current working capital days?
About 160 days net.
Okay. And what working capital days are you targeting?
We are targeting 120.
120. So by when will it be achieved, sir?
See, this has just gone up because ramping up on phase 2. What happens is you buy everything, you push it into the department, and the output is less. So obviously number of days looks artificially high. It will get normalized in second quarter this year automatically, even if I don't do anything.
Okay. Thank you. That will be all. Thank you.
Thank you. We take the next question from the line of Sandeep Mehta from Value Investment. Please go ahead.
Yes, good afternoon. The other expenses category in the income statement was it was much higher this year. And if I recall, a lot of that was one-time items maybe associated with the spin-off, the demerger. Could you just clarify that how much of that was unusual sort of one-time expenses that may not be repeated going forward?
So, not one-time expenditure, but because we have ramped up the capacity, therefore we have higher expenditure and revenue has yet not come. So, we have not capitalized the other expenditure.
Did you got the answer?
Yeah. So, is this sort of the run rate that you would expect sort of going forward as well?
No, per unit expenses will go down, but these are initialization expenses. When you start 300,000 spindles, these are the expenses which has happened and output has been low. So obviously on phase of it looks higher, but the margins will improve the moment higher utilization and efficiency will take place.
And
but according to our team, there is not one-time or stamp duty or one-time large expense in this. Mostly business related.
And when you talk about, higher utilization, margin efficiency, what you just mentioned, and you also mentioned that, by fiscal 2020, you're going to have the higher end yarns also. Could you just give us a sense that looking out 2 years, so, for fiscal year 2020, once you're sort of fully ramped up, you have all these high-end products coming on, these, higher price points products, what sort of revenue run rate expectations or earnings per share expectations can investors expect 2 years out? Once, this expansion plan is sort of fully up to speed, can you just give us a range or a ballpark of what you might expect, please? Thank you.
I can give you an overview. Currently, we are pushing volumes, and the product range what we produce are superior quality, but the products are widely distributed, more or less like a premium commodity. We are going into exclusive yarn with less volume, higher distribution, and very, very expensive per kilo. So cost-wise, very, very high. Obviously, margins are much, much better there. We expect yearly revenue in 2020 at about 4,400 crores, with a very healthy EBITDA margin of about close to 17% on a console basis. Here, there are a lot of value addition takes place. So when you spin, then you die, and then you do doubling yarn. So it depends on the way of marketing. The revenue would fluctuate, say, 4-5-10%, 400-500 crores here and there. And profitability may fluctuate between 16.5% to 18%.
Okay. And sort of if you run the entire numbers, what sort of EPS range would that imply?
Close to about 6.5 to 8.5 range would be practically achievable.
Okay, so that's 6 rupees 50 paisa per share to 8 rupees 50 paisa per share in EPS, if I understand you correctly.
Yes.
Okay, thank you.
Thank you. We take the next question from the line of Hemish Shah, individual investor. Please go ahead.
So I wanted to know the receivables number. So when you look at the receivables number, it's like 550 crores. So when do you expect it to go down?
See, these receivable numbers will go down within next 2 months, but in yarn business, you expect about 60 days is normal. So when you sell at 60 days, you receive it in 72 days. These receivable days are going to be the norms in domestic and international business. In certain part in international business, it's 120-day LC, 90-day LC, though we don't do much business like that, but these are again the norms. Working capital is pretty high in spinning industry. Our focus is to go below 120 days of net working capital. And that is exactly what we are going to do. We can achieve this by 2 ways. If we import cotton or government again allows LOU, LOC, then what happens, we can do 365-day import credit from various cooperative societies in USA who sells cotton and in Australia. And that gives us a very low working capital or negative working capital cycle. But currently we are more dependent on buying locally and we don't have those facilities to import. But there is a lot of representation going on to RBI to again start allow the long-term LCs, which would allow the spinning industry or any company who are agri-product based to have working capital below 90 days.
Okay, and one more question. You said you'll be raising another 1,500 crores or so. So what will be the marginal cost of capital for it?
No, we are not going to raise anything. We will have...
You said the peak borrowings would be around 5,600 crores. And if I look at your balance sheet...
It's tied up. It's already there. And
it's already there. So no more borrowings.
No. No more additional. We don't have to go to the banks as it is. They are not disbursing. So we don't have to go to any other banks for any new application. Whatever has been planned, we are just implementing it.
So do you expect the cost of capital to go down further?
No, we expect the cost of capital to remain same.
To remain the same.
Our incentive is 7% plus 2% and tough is in some products is 2%, in yarn dyeing it is 4% tough, and Gujarat government is giving 7% subsidy.
Okay. And one more question, last question. What kind of revenue growth run rate can we expect after the expansion is done? After 20? After the expansion is done, what kind of revenue growth can we expect? Like the run rate, the revenue growth run rate.
We expect, as I said before, we expect about 4,400 to plus minus 500 crores from that number as a full-blown revenue. And we expect between 16.5 to about 18.5% of margins.
And thereafter, will there be some growth thereafter, or will it be stagnant at 4,500 crores or so?
Then it depends on the value addition, product mix, raw material prices. So obviously there will be growth. there will be more growth, natural growth, but depends on the way we distribute. So from wholesale to retail to depot-based retailing, the growth will come. People have to innovate the growth. We expect, but it won't be ramp-up growth. So our installation would get over, the site will be full.
Okay. Thank you so much, sir.
Thank you.
Thank you. We take the next question from the line of Manish Manwani from Badanza Portfolio. Please go ahead.
Good evening, sir. As we see, your stake in the company is less than 30%, and you guided for 6.5 to 8.5 BPS. So the stock is currently traded at very dirt cheap valuation. So any plan to increase the stake?
We had just increased the stake in the
Sintex Plastic.
Yes, other side of the business. And so once the promoter has free cash, definitely this is a very attractive levels to buy.
And what about our effective interest cost annually, if you tell?
I think gross interest cost will be about 10%. Gross. Then negative is then we get the subsidy from the central government or state government.
And how long it will, you will beneficial for that?
5 years.
From now?
Yeah, this is the first year, I think. It depends on the loan. We have not taken all the loans at one go. So every loan has from day one, it's a 5 year.
Okay, sir. Thank you. That's all from my side.
Thank you.
Thank you. I would like to remind all the participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone. Next question is from the line of Vijay Lohia from Value Investment. Please go ahead.
Hi, good evening, and thank you for taking my question. I had a follow-up on that subsidy that you're getting from the government. So, sir, what is the total of your total borrowings? How much of the borrowing qualifies for subsidy? Is it all of it or a portion of your borrowing?
No, it is, every part of the capex is not given subsidy. They give only for direct machines. So, whatever the capex plan, it has nothing to do with the loan. So, you can borrow whatever you want. But government will give a part of your capex certified by them, their people, industrial people, which qualifies for subsidy. And that is machinery. And they do not give on other things like soft assets. Plus, they do not give on land, building, other hard stuffs. So, the subsidization portion in our case would be somewhere between 3,600 as of today and will go up to about 4,000 crores on fully blown basis. Okay. So this subsidy is also, I want to clarify, is 2%, 4% and 7%. So there are different subsidy available on different equipments. On some equipment it is only 2%, in some it is 4%, and in most of it is 7%.
Okay, so your total borrowings of about, let's say 500 odd crores, 400 crore qualifies for that, but then there are various subcategories within that. Okay. All right, no, that's pretty helpful. Thank you so much.
Thank you.
Thank you. We take the next question from the line of Aditya Mehta, individual investor. Please go ahead.
Yeah, thanks for the opportunity. Firstly, I would like to know what is the capacity utilization levels till now?
Right now, the capacity utilization for first 300,000 spindle is about 98%, in efficiency at about 97% plus.
Okay.
The second phase, I can give you as of 31st March, but cannot average out because it started with 10% and slowly ramped up. Okay. So currently we are running at about 80% in phase 2, the second 300,000, and efficiency is at about 95%.
Okay. And the current quarter margins, are these sustainable or we can see improvement or downward trend?
No, definitely there are improvement possible. These margins have been affected because of, as I said, because of the import duties reduction. That has really taken a toll on our margins. Otherwise, our margins will be much, much better than what we have showed in second half. Government has accidentally reduced the import duty from 25% to 5%. So that obviously at average price of 250 rupees a kilo, 20% is 50 rupees. So it's a huge amount.
Yeah. And about tax rate, the tax rate has increased this quarter. What is the reason behind this?
Sorry, what has increased?
Tax rate.
It is on an annualized basis.
I don't think it's because of the quarter. It's just annualized thing. So first 3 quarters they would have accounted less, and now the entire effect has come. So I think we should consider the tax on a year-end basis only.
Okay, thank you. That's it from my side.
Thank you.
Thank you. We take the next question from the line of Ankit Kohli from Pure Research. Please go ahead.
Thank you. Sir, you said that the duty has been accidentally reduced from 25 to 5. Can you please elaborate what you mean by accidentally? I mean, is it like a clerical error, or is it like part of the normal GST and there are, initiatives that organizations are taking to reach out to the ministry, and then there's going to be a process which may or may not go in our favor? So I'm just trying to understand what we mean by accidentally reduce the duty.
So these are my personal words, accident. I think it's a clerical error. It was 25% import duty on all yarn before GST. And after GST, it got reduced to 5%.
Okay. Why do we feel that it will go back to 25? Has the government indicated something to that effect, or, where are we kind of drawing that inference from?
Yes, I was going to tell that. So we approached to the ministry, the industrial ministry, the finance ministry agreed that yes, there is a clerical error and they would like to push it up. The file is currently with textile ministry. So once textile ministry clears it on a certain data point basis, then this duty will again reinstate to 25%. Okay. So we are not sure we will get it, but there are good chances that it will happen. But currently the file is pending against textile ministry. Now this does not affect Sintex alone. It affects the entire country's textile industry. Either it is spinning, weaving, anything. The duty has changed and they will have a fresh look on entire classification of duties. So I don't know where it will go, but it won't go below 5%. That's for sure.
Do we have any timeline which the ministry has indicated for the same?
Do we work with it? You just have to keep on following.
Okay. All right. So secondly, thank you for that clarification. Secondly, I'm just trying to understand, so what are we doing to, as an organization to strengthen our competitive position in the market? So of course, capacity utilization and back-end optimization is good, but how do we make sure that we will stay ahead of competition, and what are the steps that we are taking, and what are the current competitive advantages that you see and the future ones which you want to build?
See, the biggest cost in competitive advantage is raw material. And we are optimizing our raw material purchase by various things. First, buying local. So we have installed our machine. Our capex has been designed to run at a low speed and use Indian cotton to produce best of the quality in the world. And so, yes, our capex is little higher, but our raw material cost is lowest in the industry. So there is a huge planning, and currently buying local, most of the fiber buying locally gives us a huge advantage. Everyone knows that India is the largest producer of cotton. Gujarat is the largest producer within India. And our plant is located in Amreli, which is the largest producing district in India. So we are right in the cotton belt. There are very in 40-50 kilometers around us, there is no other spinning industry. So we can buy a good local cotton. We are 6 kilometers from the port. We get, because of our quantity and certain long staple fiber we have to import from international market. So we definitely have advantage on our quantity purchase as well as our vicinity to the port. Thirdly, obviously the technology and the automation. The second highest cost is power in spinning industry. And to reduce UKG, means per kilo of production of yarn, to reduce power cost, we are currently lowest in the entire industry. Single location helps a lot. There is not a single other spinning industry in India who has such a large installation at one location, and that too all compact. So again, producing superior quality with the least possible energy cost, that is going to be the key area. And lastly, the labor cost. High automation reduces the labor requirement, and continuously innovating the product mix on raw material side to give the dedicated quality, consistency in the quality in dispatches has created a brand. Today, our yarn is commanding the premium in local market as well as in international market. And that is again building on branding and building on quality and distribution is going to be the key for driving competition out. These are the things what we have done with first 600,000 spindles. On top of it, we are coming out with another spindles which is going to enhance our offering to natural fiber. We'll spin anything under the earth who is naturally grown fiber. Either it is bamboo fiber, cotton, silk, linen, wool, any fiber which are naturally produced are going to get spun at Sintex Pipavav under one roof, again offering the same high-end qualities, dyed as well as semi-bleached yarns to the local and international market. So that breadth will also help us to create a brand and deep penetration and small distribution will increase per kilo of realization. So I think these are the steps which we are taking to ensure the future of our spinning project.
Thank you. Before we take the next question, a reminder to the participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone. Next question is from the line of Nitin Gandhi from KFS Trade. Please go ahead. You may please go ahead, Mr. Gandhi. Your line is unmuted. Mr. Nitin Gandhi, are you present? Hello? Mr. Nitin Gandhi, we've unmuted your line. You may please go ahead. As though there's no response from the current participant, we take the next question from the line of Kaushik Shekhar from Vemelin Advisors. Please go ahead.
Yeah, good evening. Thank you for this opportunity. I just want to understand what is the asset which is yet to be productive, the current capital work in progress, which is about 2,350 crores. And the second question I had was, that you had mentioned that the 6 lakh spindles will produce around 725 crores per quarter, which takes it to around 2,900 crores on an annual basis. And you had mentioned that your peak sales will be around 4,400 crores from the current facility. What would be the other assets which will be contributing to the balance 1,500? Thank you.
So currently we have about 2,000 plus crores in capital work in progress, which will get converted into real estate, into assets in next year, in few quarters. So at least next 5 quarters we'll see that this gets converted into assets. There will be 3 major units, you can say. One is linen. Second is short staple spinning, which includes silk, wool and other stuffs with blend of linen. And third would be dyed unit, where we will be producing various kinds of dyed yarns, so yarn dyeing unit. And fourth unit would be melange spinning, which is exotic spinning, which includes few percentages of color fiber blended with a natural gray fiber and got spin. So it's called melange or grindle spinning.
Yeah, okay. And hello. Yeah, and what will be the turnover from these capital, currently what's in capital work in progress?
So as I said, our total sales, including textile yarn, on peak basis will be about 4,400 crores plus minus 10%. That also depends on the product mix as well as raw material cost. But we should be somewhere there. So on worst case scenario, we should be at 4,000. In the best case scenario, we should be at 5,000 crores.
Would it be correct to say that the balance is going to come from the even highest value addition? The highest value addition products are yet to come into production.
Exactly, because they are difficult to make and they are difficult to sell also. So anyone coming into spinning industry would come with the basic products and go in a superior products. We came in with a compact yarn, which itself is a superior quality product. So now we are slowly ramping up into fashion industry, very, very ultra high fashion industry. And there the quantities will go down, but per kilo realization will be very, very high.
On the full turnover, or do you expect a 4,400? Would there be any trading turnover, or this would be only all your production?
Trading turnover will be extra. So if I am doing, and we will do trading. So we will start trading within next 18 months. And why we need to do trading is because at a point you cannot service the entire customer fully. We are also not concentrating on a man-made fiber, which is acrylic, polyester and viscose. So when a customer has to be fully serviced, we will need to buy this yarn from outside and we have to sell to them. We also do not make open-end yarns. I'm sure you know that open-end yarn is a very popular coarse count yarn. So these again we will have to buy from outside and service our customer. So there will be some amount of trading which we will show it separately in our numbers. But when I'm talking about this number, I don't include that.
Sir, your current margins seem to be higher than what you are projecting. So would it mean that the turnover which will come later will be of a different nature?
No, it won't be. But my current margin is higher on account of certain costs which have been initialized. So on a regular running, when I'm predicting 2 years, I have to keep some margin for me and then speak. So obviously I'm being very conservative when I'm throwing a margin number 2 years down the line when I'm dealing in a commodity raw material business as well as such a large volumes.
Thank you. Thank you very much, sir.
Thank you.
Thank you. We take the next question from the line of Ankit Kohli from Pure Research. Please go ahead.
Thank you. So sorry about the earlier question. I got dropped, but I did get your reply for the most part. So thanks about that.
Thank you.
My follow-up question is, what do you believe are the biggest risks to this whole plan that you've laid out for the next couple of years and both these capacities coming online and then, realization of revenue and margin? So what would be the biggest risk that the company faces as this goes forward?
I think the biggest risk is obviously it's a agri product. Raw material is a completely man-made. It's non-man-made, so natural raw materials when you are dealing with. There is a cyclic situation which takes place, weather-related, farmer-related issues, and especially in India more than any other country. So obviously that is a little risk. Second biggest risk is, sometimes this kind of accidents or foolishness happens when by mistake or by oversight people reduce or increase the duties. So say tomorrow if someone says that I want to put 40% duty on cotton imports, or they can say we want to reduce the duty to zero on fabric imports, or some these kind of decisions which are restless taken by central government is also a risk. We just saw it happen a few months ago. So I think these are the basic risks. As far as operations are concerned, usability of the cotton and cotton fabrics into the world apparel market is very strong.
Okay. And then how do you think we are kind of, preparing ourselves to, strengthen the company against these risks that you mentioned? So what are the steps we are taking internally to minimize the impact of these risks?
What we have done is we have used all the raw material available in the world geographically. We have imported cotton from Australia to USA, to Africa, to Chad, Tanzania, South Africa, Egypt, everywhere. So basically, we have diversified our raw material risk, weather-related risk. We have also diversified northern hemisphere versus southern hemisphere. This is very important, and very few textile company thinks that, because the cotton season is same world over. Either it is in US or in India, we both are in northern hemisphere. But southern hemisphere has a reverse season than us. So it makes sense to buy at least 20-30% from southern hemisphere and keep 70% from northern hemisphere, and we have done that. Also, as far as distribution of our product is concerned, we have been neutral. We are heavy on exports, so depends less on Indian government policies. We are, at one point of time, we were 75% exports. And I think within next 45 days, we'll reach again 75% exports if rupee remains at 67. We have exported till date 52 countries. On any given month, we do 20 to 25 countries. So very well diversified. We have also started depot, and this is our future. So we have just started a depot in the south. That means we transport inland. Before we used to send goods from our place to south region, Coimbatore region, by truck. Now we are shipping them in ship from Pipavav, which is half the cost. We stock our own without sold material in our depot, and we cater to small weavers or knitters. We give them 2 box a day. They don't need to keep a stock. We'll keep it for them, but we charge them higher price. So obviously this depot is just a starting point. We are looking at the success for next 3 months. We'll start in east, north, and then we'll go international. So we'll have a depot in China, we'll have a depot in Bangladesh, Vietnam, Turkey, Portugal, Poland, many countries around the world.
Okay. Sir, 2 more questions. So one is specific to the fact that you're importing from a lot of countries. Now, a couple of years ago, or 1.5 years ago, we observed that, Welspun had a lot of issues because, the Egyptian quality that was promised to them was not delivered, and, they lost clients because of that. So I would like to understand what is our company's plan to, put together, a quality management, framework. That is there one that exists, or are we planning to put one to make sure that the whatever we are importing matches the quality that we expect and that we are committing to our end clients? And second question which I have is on the competitive landscape. Who would you classify as your biggest competitors within India or worldwide? And how is our market share moving with respect to them?
Answering first question is that we are very transparent to our customers. What we write on our orders, we use the same raw material. There are basically 4 different raw materials. So either you are selling at a Giza, or you are saying contamination free, or you are saying BCI cotton, or you are saying California. California is mostly Akala or Supima. So when you use these brands, you have to make sure that you have that raw material and you are using the same for the production. So we have been very transparent. We also do DNA mapping. So basically, our customer can demand at a cost a certificate from us to identify the DNA of the cotton to match the origin or the fiber branding. And this we are happy to provide. So, and we were the first one in India to offer this. So obviously this makes sense, and we command the premium with the we overshoot our quality requirements to the customer. And
slightly different. So I understand that we are very transparent and we provide ample proof to the clients. My question is, on our procurement practices, when we import raw materials, it is beyond our control, if we don't have a good quality management system at the procurement level. So how do we make sure that whatever we are getting from our suppliers is indeed the quality which we are expecting? Is there a framework for that we have in place?
Definitely yes, because that is by default, not even because of the customer. Even for my efficiency, maintaining the margin, I need to do it. If the cotton quality is bad, I would make more waste, and that would increase my raw material consumption and less profit. So it is in my interest to have the optimum raw material quality on the back end. And obviously the best way to do it is buy in the season, buy with the branded suppliers who have been in business, who have been transparent, and we have an excellent grading system with our cotton procurement department. We also do a lot of forward hedging on quality. There are two countries in the world who sells you natural fiber, but on a numeric numbers. So they promise you quality and they overshoot that, US and Australia. And most of our imports are from there. So definitely it costs us a little more, but on process we save a lot. So that is how we do. We are one of the first companies to start with Israel. Israel started cotton production about 3 years back, and we were the first one in India to import that. And Israeli cotton waste is half then of Indian cotton. And obviously it improves our margins. The quantity availability is very low, so we commit our sales accordingly.
Okay. Thank you, sir. And my second question was around the, who you view as your competitors within India or globally, and how do you think our market share is moving with respect to them?
India, Vardhman would be our nearest competitor. But today, if you see in the market or you ask anyone, Sintex yarn commands a premium over them. Definitely, we have been today ranked number one yarn producer, cotton compact yarn producer in India, and obviously followed by Vardhman and Trident. But yes, today we are far ahead of them.
Okay, sir. My final question: what is the management's thought towards creating shareholder value? How do you view that? How do you plan to create value for minority shareholders over the next few years?
Definitely by improving the numbers. So obviously we have been in ramping up capacity, and now our debt is also at the peak level. Investment is almost over. We have to first make sure that all the invested assets are producing optimum levels, generating maximum profit and increasing EPS. Also, best practices as far as corporate governance are concerned, and reward shareholders in the future when debt level goes down. So the first idea after increasing into free cash flow, we'll use the cash flow to reduce the debt, will immediately improve the shareholders' value. And we don't want to be a zero debt company, but once it is well in control, say less than 3 times, we'll definitely start increasing the returns, numeric returns to the shareholders.
And on the corporate governance front?
Definitely we are one of the best directors. We follow best corporate governance practices. Our reporting standards has been extremely well, and we would definitely employ very professional people to do day-to-day operation as well as legal shows. So obviously we won't hesitate but to employ the best.
All right, sir. Thank you very much. That's it from my side.
Thank you. Well, that seemed to be the last question. I would now like to hand the floor over to the management for their closing comments.
I thank you everyone to actively participate, ask very intelligent questions. We are welcoming all the suggestions. Please do write to us if you have any more questions or suggestions. We'll be happy to respond. Thank you.